Hello and welcome. Good morning. You're tuned into the small and mid cap show. I am Hersh. Sayta. With me is Hiral, Dadia, and we're going to, of course, shift focus to the small and mid cap space as we always do at 11 a.m. every day. But let's take a quick check on markets. Nifty showing some bit of weakness, down over 0.5% in trade today. You're seeing the advanced decline ratio, and if we can have that quite solidly in favor of the declines, 38 declines to the 12 advances that the Nifty 50 is seeing, and even the advanced decline ratio on the NSE is nearly 2:1, more than 2:1, if I may say so. Also, with regard to sectoral indices, you're seeing across sectors, you're seeing weakness except the defensive pharma. The Nifty Pharma Index is up roughly 2%, but other than that, you are seeing across the board, you're seeing a sea of red. Let's quickly shift focus to the Nifty Bank, down around 0.7% or thereabouts. We're seeing the Nifty Auto in focus on the back of those auto sales numbers, which continue to trickle through, 1.5% lower on the Nifty Auto. It's a benign set of numbers overall, even from an auto sales standpoint, so no surprise there. You're also seeing the Nifty Media, which is down 0.7%, metal also down by as much, the Nifty PSU Bank also down by as much. The Nifty Realty, which has had a solid run in 2023, has opened 2024 also % or so lower today. So that's where we are at. Let's quickly shift focus to the small and mid caps. Hiral, what's happening in that space? Because the broader markets did see some bit of positivity yesterday. Where is it at today?
Absolutely, Hersh. Let's pull up the mid cap and the small cap index on the screens, and that will tell you if that outperformance has continued. There you go, cuts of around 0.8% coming in with regards to mid caps, and similar kind of cuts coming in terms of the small cap index as well. Overall, a lot of stocks which are in action in today's session. You have Torrent Pharma, where US FDA has now come out and given out the observations which regards to their Chatral facility. The stock is now seeing marginal gains of 0.4%. Interesting to see how Lupin has jumped in trade today after Nomura has gone ahead and increased their target price on the counter. In fact, it's the pharma pack that is up and about in today's day of trade, and it's actually hit a life high. Z has around 11.6 lakh shares that have exchanged hands in trade today. So Z Entertainment is one stock that is in focus. RPP Infra is in focus today on the back of multiple orders that they've received, and so watch out for RPP Infra in trade. Let's look at a few of the volume buzzers today. Alembic Pharma, All Cargo Logistics, Spark, Lemon Tree Hotels. In fact, Lemon Tree Hotels, one of the top picks of Motilal Oswal for 2024, is in focus. Smart moves coming in on that one. And a PTC Industries, where the volumes are almost little over 3 times its 30-day average. So these are a few of the top gainers and movers and shakers in trade today. And from a sectoral perspective, Auto, IT, Bank, FMCG continues the downtake. Pharma, Energy are the ones which are seeing some smart moves in today's day of trade. And if you see from the auto names that even Hersh was mentioning, Bharat Forge, mild gains coming in there, but from a MRF to a Balkrishna Industries to a Motherson, Bosch, Sona BLW, Tube Investments, all of them have been trading under pressure. So along with the auto majors, that's the OEMs, you have the ancillaries also, which are down and about in trade. But let's shift focus to the chemical space now. Galaxy Surfactants, that has been a stock that we have been eyeing since quite some time. That space has been absolutely interesting as well. And overall, the company has actually guided for a volume growth of around 6 to 8%. Clearly, a lot of things which are now shifting and changing for the company. The key is what happens from here on, because base oleochemicals, that has been in focus. We are seeing some bit of market share gains that are coming in as well with regards to this company in the HPC segment. So let's understand from the management. We have Mr. K. Natarajan, ED and CFO, who joins us to give us more. Mr. Natarajan, good morning and welcome to the show.
Oh, very good morning. Thank you for having me on the show.
Always a pleasure. Let's start with a slightly broader picture. Clearly, when you talk about base oleochemical businesses, which are based out of Malaysia and Indonesia, they were taken as a major threat. However, I do understand Galaxy Surfactants, the majority of the business comes in from HPC, and you have seen market share gains in India. How is it, in terms of the other global markets?
Oh, yeah. So, as you have seen from our results for the first half, I think we had a very impressive volume growth of close to 9.5%. Africa, Middle East, Turkey, which was a little bit lagging the previous year, started turning around pretty smartly. And we do see that continuing. India has been a bright spot in terms of the way, as an economy, we've been growing. Even for the HPC segment, it's been a pretty bright spot. We grew by almost upwards in double digits, high double digits in the quarter and for the year H1. US markets have started coming back after the round of destocking has gotten over. Europe seems to be pretty much holding steady, and Asia Pacific seems to be doing pretty well. Latin America, again, as a market, is coming around pretty smartly.
Right. So, Mr. Natarajan, from what you're saying, with the revival that we are seeing in terms of the global markets, if you have to look at Europe and America, does that mean that you will overshoot your guidance of 6 to 8% from a volume perspective, taking India and the global markets into consideration? And if so, by how much do you think will your market share improve?
No, we would love to, as we did do better than the 6 to 8% guided volume growth range in the first half. But yes, I think things are looking better, except that in case the Red Sea issue continues in terms of the attack on all the ships, even yesterday we had one, then it can lead to issue in terms of moving our goods into Europe, Americas, and Latin America. So, but as of now, we are still gauging the impact. Things seem to be getting better, but yes, that can be one headwind, and that can create issues for us in the coming months.
Right, still gauging the impact, but let me quickly have your take on margins as well. You did mention that Latin America seems to show some signs of recovery. You're also looking at possible rate cuts starting in this calendar year, and we've entered that. So what's your sense with regard to where margins will lie, sir? Do you expect some amount of margin increase or starting to creep up towards that higher band of 15%?
No, we actually guide the market for an EBITDA per metric ton guidance. So we did say in the last investor call that we're looking at, for the full year, it being around 19,500 to 20,500 per metric ton for the full year. And we do see that's pretty good, given the fact that volume growth has been pretty impressive in almost double digits. And it also means that with Europe and Americas coming back, with the specialty portfolio component being better in those geographies, the margins certainly have a headroom to go up.
Right. So, Mr. Natarajan, from a margin perspective, I'll take that conversation forward. If you have to look at the raw material price trends from crude palm oil futures to China ethylene to even phenol and benzene, what is the trend indicating, and how much of it you see reflecting on the margin side of it, negative or positive? Because it's a pretty mixed trend, though on an average, everything has gone down.
Oh yeah, so in fact, crude palm oil, benzene, they have been holding pretty steady. They've been moving in a very tight band, of almost 3 to 4% month on month. Yes, so raw material prices being not so volatile is good in terms of ensuring that our customers would be able to ensure a very steady pricing and even pass on some of the reductions to the consumers, which can revive demand in a much more significant manner. And we do expect that if this continues, it's good in terms of getting the demand story much better in India as well as in Africa, Middle East, Turkey, which have been ravaged. Africa, Middle East, Turkey has been pretty ravaged by food inflation. With that getting stabilized, things can be much better in terms of volume growth.
Right, and sir, to try and understand from you what's happening on the domestic side of things, how is demand shaping up domestically? We were expecting some bit of revival sometime this year. When do you believe that is going to start kicking through?
Well, it should, because rural demand has been lagging, and then we do see some green shots in terms of it getting revived. The stable feedstock prices, as we just alluded to, is going to be the key to ensure that whatever green shoots we're seeing, they end up getting sustained. And yes, HPC segment is typically grows in line with the GDP growth, and we do see that with the GDP growth projected about 6.5% for India this year, things can suddenly look better from here on.
Right. Overall, Mr. Natarajan, if you have to look at both the segments from performance surfactants to specialty care, volume and revenue mix has been absolutely in line. How do you see realizations then pan out?
Yeah, realizations, essentially, it's very important that with the steady feedstock prices, it does enable you to manage your realizations much better, manage the volatility much better. And with the specialty portfolio getting a better traction with Americas and Europe coming back, I think it holds us in good stead in terms of our margin trajectory being much better.
So then, if you're saying, are you saying that performance surfactants is much more margin accretive versus specialty care? And if so, what's the outlook looking like in terms of FY24 and 25? Because majority of the companies are expecting that demand revival to actually be stable from FY25 onwards.
I think it's not that performance surfactants also as something in terms of how do you manage your feedstock positions well, and that's what enables you to able to compete in the market and able to get your volume growth as well. Whereas specialty portfolio by nature enables you to get better relations given the nature of the applications in which they get into. They get into the masstige and the prestige segments. In Europe and US typically have been the big markets for us as far as those that segment is concerned. And that's what I said, with that picking up in US and Europe, it certainly is going to be better for us in the coming months if the demand does sustain in those levels, in those geographies.
Right, sir. And sir, we're almost into, or rather we've just about started Q4. Double-digit volume growth very quickly, yes or no? Will that be clocked in FY24 in your view now?
Said we are guided to the 6 to 8% range. We did grow at about 8.5 to 9% in H1. So we do expect that we should be able to continue this performance in the coming months as well.
All right.
Right. Thank you, Mr. Natarajan, so much for joining us on the show and sharing the views. So volume growth and demand revival is something which is going to be key from here on as well. But let's quickly slip into a short break. Pankaj Pandey of ICICI Direct will join in to talk about his 2024 bets. Please stay tuned.
Right. Welcome back. You're watching the Small and Mid Cap Show on NDTV Profit. And as we enter 2024, where are the markets really headed? Where are the most opportunities, or where are the most lucrative opportunities lying? We have Pankaj Pandey, who's the head of research at ICICI Direct, who joins us now to discuss, of course, 2024 targets for the benchmark indices, as well as his top bets and themes for 2024. Welcome, sir, on the Small and Mid Cap Show. Quick question, first off. You've set a target of 25,000 on the Nifty for 2024. What is, in your view, going to drive this? What, in your view, is going to drive these markets forward? Because we've seen a wonderful run in December of 2023, and especially even in the small and mid-cap space, we've seen a really solid set of returns in 2023. So where do you see the small and mid-cap space also go? Can we have your views?
So hi, good morning. Thanks for having me. Wish you and all the viewers a very happy new year. Now, our sense is that when we sort of approach 2024, overall, if you look at current Nifty levels, market is trading at about 20 times FY25 earnings of, say, 1,080. And this is not cheap by any comparison. Our sense is that since the earning momentum is still good, so we are expecting about 16% CAGR kind of a growth in earnings. So our Nifty EPS for 2026 is 1,250. And we're just looking at overall factors, and our sense is that while valuations are rich, but we don't see a reason for these valuations to sort of get better. So which is why we feel that we still have, so we are still sort of valuing Nifty at 20 times on a forward basis, because somewhere down the line we will look at incorporate FY26 numbers as well. And as a result of that, we feel that the market will offer about 15% kind of an upside, and which is why we have arrived at a target price of 25,000 on Nifty. Now, so our sense is that when you look at the overall setup, you have domestic inflows have already been very robust. I mean, you're seeing inflows of nearly $2 billion on a monthly basis. Then you have EPFOs incremental, which comes to somewhere about 3,000 to 4,000 crores on a monthly basis. And then on top of it, with the overall setup that the Fed is going to cut rates by 75 bips, probably market is expecting more. So overall, our sense is that the FI inflows also will be good. And on top of it, we are expecting a good amount of inflows on the debt side also. So I think with good liquidity inflows and earnings being quite good at 16%, our sense is that valuations are not going to contract, and which is why I feel that despite the good run-up what we have seen in the market of 20%, market will still deliver in line with the earning growth, which is why we feel that 25,000 kind of a target for Nifty's looks believable to us. Now, when we look at some of the themes for 2024, in fact, not even 2024, even beyond, I think some of the prominent themes have been the one. I think CapEx cycle has been still sort of going on. And largely up till now, the CapEx has been driven by the government, and our sense is that it will become more broad-based. I mean, even if you sort of look at the recent commentary from tier one players. And once that happens, you have core sectors like cement and steel also, which should sort of do well. And auto is already sort of riding the premiumization trend, and that is getting stronger with the fact that when you look at the demand for top-end models or feature-rich models is getting stronger. And bank, obviously, we feel that nothing will happen without banks, and banks obviously will have to participate, and banks have come back on a very strong footing. In terms of most of the parameters you look at. And real estate is already sort of seeing a decadal revival. We are probably in the second or third year, and our sense is that real estate cycle usually lasts 5-6 years, if not more. So I think these are the themes which we feel should play out in 2024 and even beyond, some of them. And most of our recommendations are within these themes only.
Right. Thanks, Pankaj, for that. Let's quickly look at your top picks from the BFSI space. You're positive on Ugro Capital as well as SBI Cards. What's your rationale?
So on SBI Card, our target price is 950. A reason for liking SBI Card is that, see, credit card is a good business. It's a high return ratio business, 5% kind of ROEs are in excess of 20%. Now, this company hasn't done well in the last 1 year, largely because I think there are a number of factors. While this company has got about 18 to 19% kind of a share in terms of overall cards issued or in terms of spend. But the challenge always has been that we have seen a lot of regulatory clampdowns also. But our sense is that everything is there in the prices at this point in time. Our sense is that the spends will continue to grow. And the segment, say, for example, revolver segment was sort of experiencing moderation. And our sense is that companies looking to sort of mitigate that to some extent by coming up with new segments or new categories, like when people sort of spend on card, you convert those into EMIs. So that would sort of help. And then I think our sense is that on the procurement side also, the company is going to procure accounts a lot more digitally. And on top of it, our sense is that the interest rates, when they decline, usually the cost of funds for this company will come down, and that should lead to improvement in margins as well. So worst thing, or most of the worst things are already there in the prices. So we would expect recovery to happen in this business, and which is why I feel that SBI card looks good to us at current levels with a target price of 950. Now on the UGRO, here our target price is 350. Now, MSME is a big segment, largely untapped. I think this company is sort of a niche player there. They approach this segment with a data-based selective models, and which is why they focus on only fewer segments of the market. And overall, the growth trajectory is expected to be quite robust. So this company is expecting 50% kind of a CAGR in terms of overall earnings. ROEs are also sort of expected to improve from nearly 1% to 2.7% in 24 and further to 3.3%. So I think this is another segment which is sort of untapped, and this company is looking to sort of drive this through their selective niches. So which is why we like this company also with a target price of 350. Another positive for this company is that not everything is going to be on the book. So 50% on and 50% off the book is what the model the company is going to follow.
And so, we're really short on time. So if you can make this really quick, with regard to your other picks for 2024, which ones do you think really stand out within all the ones that you feel within the larger market?
So Birla Corporation, the overall expectation is that the EBITDA per ton should sort of double from FY23 levels, largely because of lower fuel costs. So there we have a target price of 17.55. Now, Uno Minda within the auto looks very attractive to us because this company is into alloy wheels, seating, you have airbags, and historically they've grown a lot more better compared to the industry peers because of the premiumization trend. And they've got a fairly large order book of nearly 3,000 odd crores on the EV side. So this is another company which should benefit. NMDC, because our sense is that with 300 million ton kind of a capacity being chased, our overall sense will be that this company will continue to sort of ramp up the volumes by 5 to 6 million tons every year. That should lead to double-digit top line and bottom line growth, and is still trading quite attractive at 4 times EV by EBITDA. With a target price of 250. And Grindmill Norton, largely because this company used to do a capex of nearly 50 odd crores on a yearly basis, but in last 1.5 years, they have done a capex of 424 crores. And which is why our sense is that ideally from with this kind of a capex, the company will be able to deliver double-digit kind of a growth and with a target price of 2,700. And last but not the least, the real estate sector is sort of doing very well. Greenply, our sense is that should do well because they are coming up with the MDF plant, which is already operational. Capacity utilization should ramp up from, say, 45% expected this year to more than that, and with better margins. So that should sort of lift the overall margins of the company from single digit to double digit, and with a target price of 295.
Right, Pankaj. Thank you so much for taking us through all of them in such a short span as well, because these are topics that investors are watching out for, but clearly good cycles that could be in the offing. So that's Pankaj Pandey, Head Research at ICICI Direct, giving out his topics for 2024. Completely out of time, but that is a wrap on the small and mid-cap show. And the thank you from Hersh and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit for more news and updates.